And then the big tech companies spending nearly $300 billion so far this year on capital expenditures. Can you really be bearish as long as the latter is going on?
No, not at all. I think that's what really is carrying everybody forward. That is the wind that's keeping everything moving. Certainly on our side, we have such a strong conviction in that whole tech area because we see the spending and we see the market expanding, and we know that tariffs are going to impact certain companies within that area. However, the growth that we're expecting is going to far exceed any of those challenges, and we expect those companies to weather those challenges, even though there might be some extremes, as we're hearing about every other day what type of tariffs might be hitting NVIDIA. Still, the growth that we're expecting out of that company and companies like them far exceeds that. So it gives us a lot of confidence that certain sectors, at least, we can still be very positive because the momentum is strong and it's justified. The thesis still stands.
Well, one of the big sticking points is in the amount of money they're spending, the concern of do they get the return on investment? How long does it take to actually ascertain that? When a lot of these projects are building out data centers, trying to get their hands on energy is still really in the early innings.
Agree, but we are seeing the returns already. So when we just had this last earnings season, we are seeing some very positive earnings attributed to the AI infrastructure. And so this is really sort of at the core of the AI infrastructure, is now just making its way to the outer edges, right? So we are going to see that. It may not be as tangible as, this is the IRR for this specific investment. However, we are starting to see companies improve. We see, we even see a lot of companies now raising their guidance for the full year, and behind that a lot of positivity around how they can get more improvements in terms of efficiencies and things like that. We are going to see it. It may just not be so obvious, but from our perspective, as long as that happens, it's going to continue to pull this infrastructure, and we're going to continue to see positive growth in those companies.
So I take it you're still happy to buy here, even though we're at near all-time highs.
Yes, look, when there is momentum the way it is, when there is a growth potential the way it is, we are definitely not afraid to buy at the highs because there is so much evidence that it's going to continue to grow at this point.
Mark,
not across the board, but certainly in that area.
Mark, so great to see you. Thank you so
much.
much.
Let's stick with tech. President Trump saying he would set levies on semiconductors in the next 2 weeks, suggesting the rate could be as high as 300% on imported chips. Patrick Moorhead of More Insights and Strategy saying, I do not believe when the smoke clears, the administration will apply large tariffs on chips. Patrick joins us now for more. Patrick, welcome to the program, sir. Let's get to why. What underpins that statement, sir?
Well, we've seen a lot of threats that have made from the administration, and then nothing happens. It's been derogatorily called taco, but the reality is that the administration doesn't want to tank companies like NVIDIA or Apple, and it actually disincents final product assembly here in the U.S.
Really difficult to navigate this moment, Patrick, as you know, because the other topic we discussed just last week is that the money they're using for the CHIPS Act, they might try and use to take an equity stake in Intel. We've got all this heightened intervention, the prospect of tariffs, the prospect of a revenue share if you're selling into China, the prospect of an equity stake sale from Intel to the government. Patrick, how are you suggesting investors navigate this moment in this industry?
Well, I think they do a best case, worst case, and what's likely going to happen scenario. But the reality is that none of us knows what's going to happen. What I am very confident in, though, is the U.S. government will take a stake in Intel and will choose it as a national champion for some of the hyperscalers and some of the big chip makers to manufacture their chips on, because it's about national security. And it's not unprecedented for the U.S. government to take equity stakes. They did it in GM, Chrysler, even Palantir, and more recently MP Materials. And MP Materials is probably the best case or the best case study to see how the government might do that, where they take an equity stake, they take a portion of the profit. But I think there's going to be carrots and sticks involved as it relates to companies like NVIDIA and Apple. And with Section 232, which is about national security, which there's a report that should be completed any week now, that gives Trump the out to go and renegotiate things that may have been considered complete. So, for instance, the agreement with Apple, the agreement with South Korea.
is just you've got this secular theme that is driving the market. And for the 100th time, Malcolm's made the point, I've made the point, Dan Ives has made the point. This goes beyond NVIDIA and Broadcom. It goes down to Amphenol and GE Vernova and Vistra and Vertiv and Eaton and Trane Technologies and all the other parts of the S&P 500 industrials, utilities that are benefiting from this secular trade. And if we think about this, and I've talked about this a bunch, I know Dan Ives, who's coming up later, has as well. If you think about this through the late 90s, the number of times people told you in the late 90s, subsequent to the Netscape IPO, the number of people wrote about and discussed market valuations being excessive, and it's a bubble that was forming, et cetera, was innumerate over those 5 years. And it wasn't until, and this is the most important point, it wasn't until 2000 when you had the DOJ stepping in to prevent some additional mergers, which had been a huge driver of the gains, and profit warnings from Intel, from Lucent, from Sun Micro, et cetera. We're nowhere near even really a slowdown in cloud growth, let alone profit warnings. And I really think more, to Malcolm's point, as long as that trend is in place, yeah, the Fed matters, Lauren's right, as long as you're skating towards lower rates, that's a positive. But that theme is playing itself out and is unimpeded at the moment.
I thought, Malcolm, that was part of Rick Reeder's point last week that he made on this program, that you can have a problem with valuation of those AI stocks. But when you look at the degree in which they're growing their earnings and they are at the forefront of what's truly happening, and it doesn't look to be slowing down anytime soon, if you pair that with the idea that, well, the Fed is going to be cutting rates at some point, it may not be on the calendar that certain people think, want, or expect, but there are enough things that you can put 1 + 1 + 1 + 1 equals a pretty darn good outcome for these markets.
Well, the last two earnings periods have made that case too, right, Scott? So we had the questions last year of, have the hyperscalers gone too much too soon? Have they invested too many dollars? Are they committed to too much CapEx? And that started to weigh on that growth narrative. And then this year, so far, the first 2 quarters, you had the likes of Microsoft, for example, or NVIDIA, who showed up with bang out numbers once again, proving that there really is still demand and not enough supply for all of these different critical components, to Dan's point, of the AI infrastructure and the AI arms race. That's proving in real time. It's not a thing that we have to wait 3, 5, 10 years to see how are these investments going to pay off. Meta's already delivering results each time they come to us with earnings. And so they are defying gravity from a earnings multiple perspective. But I think they're also earning a little bit of headway. And that is really the narrative that I think stock market investors, again, should be paying attention to. If you're a bond fund manager, obviously every quarter point matters to you. But realistically, unless we're talking about more than a 50 basis point cut at any of these 2 or 3 Fed meetings that we're expected to have before the year is over, and that's what's supposed to drive the cutting pattern, unless they're massive cuts, I just don't think that it's really going to be enough to rock the confidence of any stock market investor who's really been paying attention.
Is the AI market in a bubble? That's what OpenAI CEO Sam Altman is warning, saying over the weekend, investors are, quote, overexcited about the AI trade. Joining me here, Post 9, is star Wedbush analyst Dan Ives. He is as excited as his coat is bright, right? I mean, is Altman onto something or no?
Look, I mean, I believe we're only in the second inning of a 9-inning game. I mean, because it's our view on the enterprise side, it's just started to play out from use cases. I think as we go into the consumer and ultimately what's going to be autonomous and really the derivatives, I mean, Scott, it's my view the next 2-3 years, we have a tech bull market, and I think AI revolution, the actual impact over the medium and long term is actually being underestimated.
Is he doing a Greenspan here where he sort of waves the flag, but we don't see the results of the hurricane until years down the road?
Yeah, I think it comes, look, and Altman obviously being the golden child that we see when it comes to AI, I think what he's talking about, there could be some froth at stages or parts of this.
Could be.
But, well, especially when you talk about some of the valuations on some, maybe on the private side, what I see on the public side, I see ultimately demand that's 30 to 40% more than I saw 3-4 months ago. I see a CapEx, ultimately really a transformational CapEx that I view as a fourth industrial revolution.
There's no question about a transformational CapEx. Does the return on the CapEx meet the moment or not? That's what we're all going to be boiled down to. We have built in assumptions. You and every investor who's buying these stocks have done that. it has to result in something, or you get a moment like Dan Greenhouse was talking about when the bottom eventually fell out in 2000.
Yeah, and I think what Dan's talking about, and to me, the last quarter and what we're seeing out there in terms of earnings, it's actually been a validation moment for AI. And it's our view that when we look out over the next 12, 18 months, I think as you look at the second, third derivatives across software, cybersecurity, autonomous, I believe investors are actually underestimating where we believe, look, it speaks to our view where this tech market's going. And I get the skepticism, but they'll continue to prove it wrong. I think quarter after quarter.
Okay.
All right, I hope you're all doing great today. NVIDIA finished the day about 0.9% higher today. I want to cover 3 things in this video. First, I'll mention NVIDIA news from this past weekend and today. Second, I'll talk about the idea of an AI bubble and where I think we are currently. And third, I'll share some of my long-term thoughts on NVIDIA. So this weekend, the New York Post reported that President Trump said he was promised by President Xi of China that there would be no invasion of Taiwan as long as Trump is president. I don't know if this is true or not, but if it is true, then it is positive news. Stocks and finance aside for a moment, I hope there will be peace, as that is far more important than anything having to do with stocks or finance. That being said, we talk about NVIDIA and NVIDIA stock on this channel, and this news is very relevant to NVIDIA. So I'm going to talk about the situation from that context. A potential invasion of Taiwan is, in my opinion, the greatest potential risk to NVIDIA over the next 5 years. Greatest, meaning the worst possible scenario. TSMC is working to onshore manufacturing to the US, but that will take time. And so for the time being, the vast majority of cutting-edge semiconductors, including NVIDIA's, are manufactured in Taiwan. And so I hope that there will not be any invasion and that this news is correct. In other news, NVIDIA announced that there are now over 2 million developers using the NVIDIA Robotics stack. Developers are building across many different industries, including manufacturing, food delivery, agriculture, healthcare, maintenance, and so many more. NVIDIA will play a crucial role in the future of robotics. And notice that they are providing the underlying infrastructure that much of physical AI will be built upon. In other words, NVIDIA is taking a holistic platform approach that will make it very difficult for NVIDIA to be disrupted by competitors. In other news today, we got 2 price target upgrades that I'm aware of. Morgan Stanley raised their price target modestly from $200 to $206. And Cantor Fitzgerald raised their price target up from $200 to now $240 per share. I don't put too much weight behind analyst price targets, but I mention it so that you're aware of what's happening. And we also got some other news that some senators are not happy with the decision to allow Chinese companies to access chips from AMD and NVIDIA. Now, I am politically independent and nothing that I say is motivated by politics. I already covered this topic in today's first video. So in order to not be redundant, I'm just going to say 2 things on this topic, and then I want to move on to address the concerns about an AI bubble. First, I do not think that it is a national security risk for NVIDIA to sell the H20 in China, and I think it is in the United States' best interest that they be allowed to do so, as half of the world's AI developers live in China. Because wherever the developers go, those are the platforms that will succeed. It is a strategic benefit to the US that developers in China continue to build on and rely on NVIDIA's CUDA platform. And second, I do not like the government taking revenue from companies without giving those companies anything in return. I'm not asking for the government to give a handout. I'm simply asking that the government allow these companies to keep their revenue and then simply tax their profits like every other business, as it should be. I hope the administration will reconsider the decision to take revenue, as I explained in more detail in today's first video. All right, now let's move on and address the concerns over an AI bubble. This concern was revived after it was reported that OpenAI's Altman said, quote, "Are we in a phase where investors as a whole are overexcited about AI?" My opinion is yes. Is AI the most important thing to happen in a very long time? My opinion is also yes. Now, this is an interesting one for multiple reasons. First, I don't know what Sam's motive is in saying this. Is he trying to dissuade firms from investing in potential competitors to OpenAI? I don't know. It's also very strange because just recently Sam posted on X talking about the strong demand OpenAI is seeing and saying that the company will roughly double its compute fleet over the next 5 months. Meaning, OpenAI is seeing very strong demand and desperately needs more infrastructure, which is great for NVIDIA, by the way. But this is a very strange dilemma wherein he's reported as having said there's a bubble, but also saying that OpenAI is going to continue to spend billions on building out AI infrastructure. This begs the question, will there eventually be an overbuild of AI infrastructure? My honest opinion is yes. I think there will eventually be an overbuild of capacity. At the same time, I think we're at least 3 to 5 years away from something like that happening. This is not the same as the dot-com bubble, not at all. The largest spenders in this AI revolution are extremely well capitalized with the deepest corporate balance sheets on the planet. Additionally, most of these companies are not investing in AI infrastructure aimlessly in the hopes of eventually finding a use for it. Rather, they already have multiple use cases for it and are investing heavily in an attempt to meet very strong demand. Consider Microsoft and Amazon, for example. They told us this earnings season that they have hundreds of billions of dollars in backlog that they have to deliver to their clients. This means they are already seeing a direct ROI on their AI investments from their paying customers, and demand from their paying customers is so strong that they're struggling to meet that demand. Additionally, consider Alphabet. The company has many use cases for AI infrastructure as they are experiencing growing demand for Gemini VO3, and all of Google's other AI tools and apps. There are actually many of them, which most people are not aware of. Anyway, Alphabet is seeing growing AI demand, and they are increasing CapEx appropriately. And of course, we can all understand why Meta is investing in AI infrastructure, as we can see how AI directly benefits the company's social platforms and advertising business. So AI demand is extremely strong. It continues to grow based on what we've heard from all of the hyperscalers this earnings season. Enterprises are really just starting to implement AI. Many countries around the world are really just starting to implement AI as well. And we have rising levels of mass public adoption. Keep in mind, another reason this is unlike the dot-com bubble is that the internet is already here, meaning use case development and public adoption are going to happen much faster than they did in the early days of the internet. We don't have to wait 10 or 20 years. Rather, it's already happening at this very moment. So, do I think we're in some form of bubble? Perhaps in the early stages of one. But I think we're likely at least 3 to 5 years away from an overbuild of capacity. The largest spenders are extremely well capitalized by means of their own earnings, which was not the case in the dot-com era. New use cases are going to be developed very quickly compared to the early days of the internet, and adoption is going to happen much faster than it did during the early days of the internet. I continue to be bullish on NVIDIA long-term, and I seriously think we are still in the early days of AI. I genuinely think that NVIDIA still has a lot of runway ahead of it. One thing that I really appreciate about NVIDIA is that they give great visibility of what to expect even 3 years ahead of time. The reason they do this is because there's a lot of infrastructure that has to be put in place ahead of each new generation of product from NVIDIA. We have a clear data center product roadmap extending into 2028 with a new generation product release each year. Blackwell Ultra has launched and should ramp substantially in September. In 2026, we have Vera Rubin, with the Vera CPU being NVIDIA's first custom CPU, and NVIDIA recently said that Rubin is on track. Then in 2027, we have Rubin Ultra, with a single Kyber rack being able to hold 576 Rubin GPU dies, for X the number of GPU dies in the current NVL72 systems. And then we have NVIDIA's Feynman after that in 2028. We have a clear data center product roadmap extending into 2028, and Jensen believes the world's computing CapEx will reach $1 trillion annually by 2030, meaning he is expecting an expanding total addressable market underpinning all of this. I continue to be bullish on the long-term future of NVIDIA, and I seriously think this company has a lot of runway ahead of it. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.